Good morning. This is Larry McMillan with the stock market update on Monday, February 14th. Happy Valentine's Day. So the market had another strong sell-off last week and finished the week pretty negatively with rumors of a Russian invasion of the Ukraine. Those rumors are still around. They drove the market down overnight last night and then since recovered. But overall, the market still has some big problems going on, much more beyond just that, a bit of perhaps overreaction to some news that might not really happen. First of all, the S&P chart is in a downtrend, and that's a negative thing that until that changes, a core bearish position is warranted. We do have an MVB, a McMillan Volatility Band buy signal. That can, be simultaneously exist in a downtrend. Its target is the upper Bollinger Bands, and all the Bollinger Bands and the moving averages are now trending lower. So that's another reason why the chart looks negative. The put-call ratios are at extreme highs. Any thoughts of a buy signal last week were apparently canceled out by heavy put buying on Thursday and Friday. But they are very oversold, so buy signals might not be that far away. But as we've often said, oversold does not mean buy. So we won't be considering those as bullish until they roll over and begin to trend lower. Breadth has gone negative again, and so both our breadth oscillators are on sell signals. Similarly, new highs have been swamped by new lows in all of our data sets, and so that indicator is negative too. So the market internals have worsened. They were looking a little better, 10 days ago, I'd say, but they've worsened again. But we're now approaching oversold conditions that can, launch another oversold rally, and those typically, can be strong, but they'll fail below the trend line. Volatility right on Friday's close, VIX had a little bit of a decline, and that gave a new VIX spike peak buy signal. So that's probably the most positive indicator that we have right now. The trend of VIX is still negative, and perhaps more worrisome, the construct of VIX derivatives is now starting to weaken. In other words, the front month, and by the way, the front month VIX futures expire tomorrow. So we're probably really needing to look at March as the front month versus April. If March climbs in price above April, that's going to be a problem for the construct, for the term structure. And so that's another potential negative that we're looking at. So overall, right now, we're maintaining a core bearish position. We will trade buy signals around it as they are confirmed. For example, this VIX spike peak buy signal. But in general, until the trend line of S&P is broken and VIX is in SPX is in a downtrend, VIX is in an uptrend, which is also not that good for the market either. But until those trend lines are broken, the core position is downward, and we'll have sharp oversold rallies along the way, but this market is going to be working its way lower, it seems. So have a great week. I invite you to visit our website where we do have daily newsletters that cover these items every day. And of course, you can stay right on top of the signals that way. So good luck and good trading.